I think one of the big questions that we have out here is, hey, what's the difference between closing costs and a down payment? Because most of the time we have a mindset of like, hey, I can put X number $1,000 down, or I can put X percentage down, but they're not the same, are they? What's the connection there?
No, they're not. And in fact, it's a very, very good question. We run into it all the time, in particular for people who are, haven't bought homes before, first-time home buyers. And even those who have bought a home or two in their lifetime, it's still not something that everyone has a good grasp on. It's only really the folks who've bought maybe several homes in their lifetime that have a pretty good idea what the difference is. Because very often I'll be approached by someone who wants to get qualified for a mortgage, and they'll have a particular down payment amount in mind, 5% down, 10% down, 20% down. And when I start the discussion with them, one of the things I usually recognize early on is that in their mind, when they say, I want to put 10% down, and they're buying a home, or they want to buy a home for, say, $500,000. So in their mind, they're thinking, I need $50,000 to complete the purchase. Well, I end up having to be the one to deliver the news that, no, that's not quite the full story. Down payment can be strictly defined as your purchase price minus your loan amount. So when you say you want to put 10% down, and again, if we're using a $500,000 purchase example, yes, the down payment is $50,000, but that's not the full story. Why? Because you're going to have closing costs. At least you are in most cases, which we can certainly talk about that as well. And so the idea here is you have to distinguish between closing costs and what I like to call cash to close. They're two different things. Again, down payment, purchase price minus loan amount. Very straightforward. It's cut and dried. Pretty easy calculation, right? Cash to close is your down payment plus your closing costs. And your closing costs which we covered recently on this program, your closing costs can include basically two major components. What we call non-recurring costs. Those are what I call one-time fee-based charges from third parties involved in handling your transaction. Because when you apply for that loan, it's not just us as the mortgage originator involved. There's several other parties involved who are performing different functions in that process of the loan and in the purchase escrow, and they're going to have fees and they need to get paid. Appraisal, the appraisal company, the credit report company. Oftentimes major employers charge a fee to verify your employment. There's going to be the HOA property manager. If we have to get certain condominium documents, they have a menu of fees for each of the documents that we might have to acquire for your loan transaction. And then, of course, you have escrow and title fees. So all of those are what we call one-time, non-recurring closing costs. Again, specific fees charged by third parties that are handling a different part of your loan process. Then you have a whole nother section of costs, which we call prepaid or recurring costs. Those are a little more straightforward. Prepaid interest on your mortgage, and then prorated, first year homeowners insurance plus a proration of that annual amount if you're setting up an impound account for insurance. And then, of course, property taxes. You may have to pay a certain portion of the annual property taxes at close. And then if you're wanting to set up an impound account, you end up having to provide some number of months of that annual property tax amount at closing to set up the account. So therefore, when you say I want to put 10% down on a $500,000 house, it's not just 50 grand that you need. You're going to need probably more like 55 to 60 to actually have all the money you need to complete the transaction. And if it is closer to the 60, I also try to remind folks, don't think that means it's costing you 10 grand just to get the loan. Half of that number, if it's 60 and the down payment is 50, half of that $10,000 number is likely going to be not charges from third parties at all, but again, those recurring costs for prorated interest, your homeowner's insurance, and your property taxes. And that can be sometimes as much or more than your non-recurring costs. Something I always stress to people all the time, because I don't want them thinking that they contact me to arrange the loan, that because I'm arranging the loan, somehow we're charging $10,000 in closing costs. It doesn't work that way.